Jonathan, thank you very much for joining me in the InsurTechTalk podcast. How are you doing, my friend?
I am so excited to see you today. It's been too long. I've been looking forward to this all week.
We just saw each other briefly in New York. That was like a month ago. So I know that for me, it looked like ages. But yes, but I know
You
that
lead me to go to
before.
the West Coast, and I'm on the East Coast, so I don't get to see nearly enough. So we're going to have a time
Okay.
together digitally to make sure we can compare notes on what's happening in this fabulous world of insurance and technology.
Can you believe that insurance is so, let me use the word, sexy nowadays? Is it still?
It is a hot topic. I mean, I've been in this industry now for like 25 years, and it's pretty exciting that we are, in fact, the hottest game in town. But that happens. I mean, the reality is that investment cycles kind of come and go, and investment themes come and go. And I sometimes describe the insurance world related to technology as like very spiky. It gets very exciting, and some companies get a lot of capital, and maybe there's some great outcomes, and then there's a flush of capital and interest into the industry, and then we have kind of a whole cycle that comes, and maybe some of those companies don't do well. People exit the market, and then everything starts anew. So one of the benefits of experience is you get to see more than one cycle play out.
Okay, we can start with the conversation that usually we have after the second whiskey. And I will refer that to my talk at InsurTech Insight. So that was a month ago. And that was what is InsurTech 3.0 and the different wave. We had InsurTech 1, 2, 3. Everyone, of course, I think AI, which is part of it, is one of the 6 forces that is leading. But most of the conversation that we had with other people is that there is new capital, and at the same time, a lot of capital is leaving InsurTech. What have you seen, or what's your thoughts about it?
Well, we're a venture capital firm, Crystal Venture Partners, and we invest very early stage with exceptional founders at the edge of insurance and technology. So we are looking very much at deploying capital. We're interested in deploying capital, and we're finding some exceptional companies to do that with. So we are also seeing what's happening in the world around us and very intrigued, because one of the things we say is we don't really believe in InsurTech anymore. We don't talk about InsurTech. We say, like, what's the future of insurance? And in fact, I would argue maybe the future has arrived. And so we're at this incredible moment where we can start to think about real substantial material change playing out in the insurance sector and for everybody who's impacted by the insurance industry.
Yeah, the taste that I had living ITI was that InsurTech is dead, long live insurance technology.
I agree with you. I actually think one of the things that I might suggest is whether it's you or whether it's ITI or others, InsurTech Connect, all these conferences may have to do a little bit of rebranding to think about that.
Most definitely. Listen, rebranding. I've been struggling to figure out what am I doing with InsurTech LA and InsurTech Talk and all the different brands that they have, and InsurTech.me. It's all over the place. I have a serious branding issue. But so if someone is a marketing person who wants to talk about this stuff, please reach out. I'll be more than happy to have that conversation. But going back to...
Well, look, I share that with you, Gilad, because I get asked, is Crystal Venture Partners an InsurTech fund? And I say, absolutely not. Because we're not investing in technology that specifically serves the insurance industry. We're investing in companies that are serving the rest of the world around us. And so that's really how we think about the impact we have, type of businesses. We back the like incredible ambition. And if we're just sitting around focusing on the products or services that are going to benefit like the insurance industry, well, that's by definition like a closed circuit. It's a closed group of people. And so if we want to be ambitious and we want to think about changing the world around us, we got to think about every person on this planet. We have to think about every business on this planet.
And what's the impact on them, right? So maybe it's not InsurTech is dead, long live insurance technology. It just should be long live insurance. And technology companies that help insurance companies to be successful.
So I think that's the point that we should be thinking about, which is like, how do we keep the insurance industry relevant for the next 100 years and beyond? Like everybody talks about like AI and it's going to transform the world. It's going to have all these implications for jobs, the nature of work, and every business around us. I am willing to make a bet. In fact, I have made the entire bet of my career around that there will be a future for this industry. It may
Of
look
course.
very different, may conduct itself very different, but at the end of the day, there's going to be risk in this world. People are going to need to know how to manage that risk. They're going to need to know how to mitigate that risk. They're going to need to understand how to transfer that risk. And the insurance industry is the part that generally handles that transfer and pricing of risk.
No, of course there is. Insurance in the old way, the old structure, or even the new structure that we've seen in Lloyd's or earlier on in the Venice, everyone is usually bringing those examples. It's been around. We're still going to have it. Maybe it's going to have a deep or a refound change sometime in the future. I don't know how it's going to be yet. A lot of people started that going, yeah, we're going to change. You're not really going to change anything. You maybe get an advantage and inject efficiency or better productivity in distribution, maybe in underwriting, most definitely in claims. But are you going to really change how insurance operates? I don't know. It's you need to really have a deep thought about that, how you hedge a risk, and you structure that accordingly, and then work with the regulator so you can actually sell it to the masses. But this is why we have captives.
Well, it's one of the things that we think about a lot at Crystal Venture Partners is like what makes for a durable business in an AI world.
And what is
There
it?
are probably three things that come to mind. One, which is how do you navigate like regulatory, the whole regulatory environment? Regulated businesses have to operate within, be compliant, and live within the construct of the regulations and the laws in which they exist. Number two, you have to be able to deploy capital efficiently and understand how to access capital and deploy that capital efficiently. And three is develop and sustain trusted relationships with customers. And so when you sort of look at those three things, trusted relationships, regulated products and services, and capital deployment and efficiency, that's something we see, really makes up the entirety of the insurance industry. And so we think there's a lot of businesses that are going to be incredibly successful in this business at navigating an AI world. But there's going to be winners and there'll be losers as well.
Let me kind of pause on that topic and go back to origin story, if you don't mind. So I think, we have to do that. Now, for the people who don't know you, which I'll be surprised, you are third, fourth, fifth generation insurance person?
Third generation. I was fortunate to come into my family's insurance brokerage business, Crystal Company, following my father and before him, his father, my grandfather, Frank Crystal. And I spent 2 years inside on the front lines of one of the largest insurance brokerage firms in the country.
That's what I love about it. It's like people who actually understand what it means. And I don't know it. I've never been a broker. I've never been an agent. I started from corporate. So started on the engineering side in farmers insurance and the other stuff. So I've never fought in the trenches and tried to sell insurance to someone. And kind of, before I joined BMI, and I'm sorry for repeating a story, I already paid for the exam for the agency licensing and all the stuff and had a Kaplan book somewhere and I was ready, and then I joined BMI and then changed from insurance to FINRA test. But so a lot of respect in terms of truly understand what it means to be the distribution channel and everything that goes up the chain up. So third generation.
So I got to spend a lot of time inside the kind of operating part of the insurance industry, got a real feel for customers, what their needs are. We did a lot of specialty insurance, financial institutions, management liability, private equity work, private clients, employee benefits. I got to, I think, sell just about every product that our industry offers. got to not only be frontline sales, but to lead sales, lead a business unit, be a CFO, so understand the kind of inside of this business. And ultimately, I led Crystal Company through a sale to a strategic, to Alliant, which is today a top 5 insurance brokerage firm, fabulous company. And then that gave me the opportunity to really rethink my career and kind of where I wanted to be. Kind of in my 40s, to have the privilege to say, all right, where do I want to be when I grow up is pretty exciting. And I just said, all right, well, there are a couple of big trends out there. There's a lot of capital at work, and insurance industry, private equity, and other capital is at work, and technology was probably the biggest influence on was going to be the greatest influence on this industry going forward. So I said, all right, what could I do that involves putting capital and technology to work? And that ultimately led me to making investments, some of which have been pretty successful, and then ultimately launching Crystal Venture Partners, really at the precipice of this AI age. We opened our doors November 1, 2022, 30 days before ChatGPT came out. So I had a insight into what was a precursor to ChatGPT, and said, this is really transformational technology. I knew it would have profound implications for insurance and beyond. And I had the audacity to go out there and raise a bunch of capital and start to put it to work. So our first investment for Crystal Venture Partners Fund 1 was in, I think, May of 2023. We backed sixfold AI alongside Bessemer Venture Partners. I'd known Alex Schmelkin and Jane Tran for a number of years before that.
Oh, nice.
And they've been doing fabulously well and setting the pace for what underwriting can be, commercial underwriting and life and disability underwriting can be in an AI world. And we made our second investment just later that summer in a company called With Coverage that is an AI native commercial lines brokerage firm. And so that was a business I knew pretty well from my experience and saw some opportunity there. And so we made those first two investments in 2023, and here we are. Both those companies announced their Series B rounds in January of this year, and so we've been kind of full circle. We now have 11 companies in the portfolio, and we're doing really well.
Yeah, With Coverage should be at 42 million, sixfold, about 30 million. That was their Series B, if memory serves me right.
You've got an excellent memory, Gyde.
Well, I have notes as well, so I do make sure, and I have my weekly investment report, so it's from time to time, the notes and memory actually match.
Absolutely. It's been an exciting period. I gave you a sense of like that kind of initial arc, I guess, of making the transformation from being a broker and an executive and working inside a big company. When I was at Crystal Company, I had 450 people around me, and I got to be kind of at the front end of a very big business. And then now I'm an entrepreneur. And I got a small team, and we're building it from scratch. We're using AI tools to be able to operate really efficiently, do some amazing things. But all of that because I get to earn this privilege of my investors do this incredible thing, which is entrust me with their capital, and then I get to go out and have the best job in the world, is go find the best founders on the planet and convince them to take our money, and then we get to help them build their business. And I got to tell you, Gyde, I love my job.
I'm sure you do. And for the founders, a few technical questions here. So,
sure.
What's your investment appetite?
We are generally the earliest institutional capital for the companies we invest in. We write early checks, sometimes as early as day one, behind a team, kind of going after an idea or an opportunity. And we write those checks with high conviction. So we'll write $1, $2, $3 million checks, sometimes as early as day one. So we're gutsy, we're early, and we have high conviction in what we're doing. And all of that because we also believe that we have an opportunity to kind of impact the outcome through the insights we have on the industry, the connectivity we have in the industry, and a real perspective on what will make for success.
Pure technology, agencies, MGAs, future carriers.
So we think that in an AI world, you have to be a little bit nimble and creative in thinking about how you make money. So we're kind of revenue model agnostic. And even more provocatively than that, I have said recently, when all software becomes, you can say, disposable or abundant, cheap, you probably have to find something else to sell besides the software itself. And so we have within our portfolio companies that are agency businesses making money off commission, others that are more like gain share based. They're helping companies create revenue and share participating in that revenue, others that are more services businesses. So everything I think in the world we live in today should be grounded in helping your customers get outcomes and then getting paid for delivering those outcomes. I think the days of selling software just on a seat basis are probably now gone.
It's a challenge, yes. For those businesses who are pure technology or pure application, that's quite a challenge. I was talking to a CTO of a certain company. The only thing he cares about now is tokens optimization. That's it. He's using millions of tokens and his team's even more. And the only thing he cares, how can I optimize the tokens that we pay the different Claude, Codex, etc. So we'll be on top of it. And things change. It's a different economy now.
It is, and look, as a recovering CFO, I can appreciate like how challenging it must be for the men and women who are sitting in those seats today to try to think about how they're managing their expense line. You've got labor on one side, and you've got maybe tokens on the other side. I told a friend recently, if I were still CFO, I would probably put those two line items together and say, this is our operating budget, figure out how to make sure we hit our target margins, and let the line level executives figure out, line level managers figure out how to allocate resources accordingly.
So earlier you kind of said Fund 1. Are you at Fund 2, Fund 3?
So we are currently deploying out of Fund 1. We're starting to think about Fund 2 and what that would look like. It's been an exciting period. Now we've been investing out of Fund 1 for 3 years. And so it's the appropriate time for us to be starting to think about Fund 2. And I also think it's interesting. We're kind of maybe at the third inning of this kind of AI transformation, however you want to think about it. And so I think the middle innings are also going to be maybe different, but perhaps more interesting in terms of less of like what's happening around the edges. And now I think we're moving to the core of the industry and solving like the key problems that we're confronted with, and potentially building the businesses that will be the future of this industry, as opposed to helping the existing businesses navigate this transition.
And here I always need to give the disclaimer that everything that we talked about today is for entertainment and knowledge, and not any type of an investment advice or and other things like that, because we are just two people on the internet or LinkedIn or wherever you hear or see us. No, this is a good time for you to start looking at LPs, not you as you in the general. Third year, already 11 companies on your portfolio who are doing well. They started early. They are in a few of them Series B. Their valuation is growing nicely. There is nice growth. I'm sure that you have, as a master of Excel, you have the different, each one where, what, and why. So you can chart beautiful graphs that will show the trend going up, and with that, the right story and the narrative for the different LPs that you're working with. It's a good timing. It's just right.
Well, I'll correct one thing, which is, my skills in Excel are like 20 years old. And at one point they were very good. Now I just talk to Claude, and Claude does it all for me. So I don't have to use Excel nearly as much. And I think that's been incredible to see the impact you can have on that. And look, when you do your job right, the market talks for you. We raised over 150 million in capital in follow-on capital for our portfolio companies in the first 6 months of the year. Our first 6 portfolio companies have all raised follow-on investments. And it's not really for us to speak about that. It's really for the founders out there to speak about what we're doing, and our co-investors. Probably the greatest compliment I can possibly get is our most recent investments in a company called Kinro, which is in the current Y Combinator cohort. And Pierre Alexander Comini is the founder, came out of DeepMind, just an incredible guy. We're so fortunate to be partnered with him in this business. But he reached out to us and he said, look, I asked a bunch of people who are the best investors in this space and they kept coming back to you. So I thought I'd reach out and see if you want to have a conversation. And so it's been like a really nice opportunity to see kind of how their thinking has evolved and how their positioning has evolved. And I'm really excited about kind of how they're thinking about deploying AI technologies to help customers acquire insurance.
Yeah, no, it's interesting time what will come next, and kind of also the next question that people like and don't like, but we started to talk about your portfolio companies. So who's your most favorite portco?
Gyde, I have 3 children. I have 2 boys and a girl. And, depending on the circumstances, I might say my girl's my favorite, or I'd say this one treated me the best this week, or they're all my favorite for different reasons. So I've learned to be a diplomat, and I will not answer that question any differently for you regarding my portfolio. Having said that, all my 11 children, and I don't call them children, but I mean all the 11 companies that we're partnered with, I think are just like great expressions of the opportunity set out there right now. And so we already talked about our earliest investments that are really thriving. And so you can see where they're going to be and kind of the opportunity has been recognized. And then you look at our most recent investments and they're just getting off the ground and they're just getting started, and you can see the potential and opportunity there. We invested in a company called Nevado last fall, Nevado AI, and the founder is Sharon Rodriguez. I've known Sharon for a decade when she was at MetLife, and she was the head of digital strategy at MetLife, and she had, I don't know, a $700 million budget there. And then she took the entrepreneurial path and joined Gary Hoberman and the team at Uncork to launch Uncork. And then she went back to the enterprise side and joined Prudential, where she was a business unit CEO. And through all that, I've had these conversations with her about, hey, what's moving slow? What's moving fast in the industry? How are we going to get technology in place? How are we going to serve customers better? And finally, over one of those conversations, it's like, when are we going to get you out there to build your own company? And we talked a little bit about the opportunity that was like, okay, it's going to be really hard for large enterprises, whether it's insurance industry or outside, to navigate this AI moment. And what could we do to help them do that? How can we start with empathy? How can we start with understanding? How can we start with curiosity and say, what can we do to help you as a large company, maybe the CEO or somebody who's running a business unit, actually move forward and get out of this moment of paralysis? And Sharon is doing exactly that with her team at Nevado AI, and they're deploying AI services and software into production very, very quickly and helping companies get off the ground and at scale. And that's a really cool thing to see. And so another company that I've had the privilege of seeing from the earliest days is Bright Harbor. They help families who lost their homes in natural disasters get back into their homes, access resources to be able to recover. And they do that with real care and concern, and also with the abilities of AI and technology to do that at scale. And so when we backed that business in 2024, we had some thoughts of where that could go and what that might look like. And then a month later, there were hurricanes that hit Florida and North Carolina. And less than 6 months later, there were wildfires that hit LA, your neighborhood. And to see the impact they're having on the communities that they work with is really rewarding and gratifying for me as an investor to see the application of technology and talent and capability to really serious problems is very rewarding. And now that same company is working with governments and municipalities and large insurance companies to be able to scale that out. So see it from the beginning, see the impact, and then see the companies grow.
So I had Will Johnson from Gyde a few episodes ago. I think it was 150 or 152.
It was 153 since
153.
Yes,
okay.
sir.
You have your notes as well. Awesome, great. I love when the interviewee is coming prepared. That's awesome. Guest, not interviewee. It sounds too official. So, what you invested in him early on? What made you pick that entrepreneur? Because the earlier it is, you invest in the team. You invest in a team, an idea, and their ability, and kind of a bet that they can actually execute on the idea that they are proposing.
Couldn't agree with you more. At the stage we invest in, these earliest days, you're investing in the team much more than the idea or the opportunity. And we had the good fortune of getting to know Will Johnson when he was at Oscar Health. He'd been there for about a decade, had been a really rising star. A number of people had said to him and had gotten wind to us that this is someone who should go out and build a business. And we spent maybe 8, 9+ months getting to know him and understanding what was important to him and getting a sense of how we would approach building a business. And I got to tell you, our initial conversation was like to build a very different business. And he came back to us, and said, guys, I know we were talking about this thing over here, but the thing that really gets me excited, the thing that I really want to do, that wants me to get up in the morning and to run as fast and hard as I can, is this other idea here. And we said, well, Will, it's your business. Like, take it where you want to go. We want to be alongside you. And so he said, look, I want to build this business. I think there's an opportunity to acquire a number of independent employee benefits agencies, those who are working on the individual health side, and apply AI in a way that helps them grow faster. He developed a really good mental model around that was informed by just his whole perspective on the industry. And I said, great, let's do that. And so when it was time to raise capital, he raised it from us and from Lightspeed. It was just a very organic, natural thing. And I think that's like our view of the best circumstances are not where you meet somebody where they're like, hey, I've got a deck. Here's we're pitching you on raising money. It's, hey, let's get to know each other. I want to get to understand your motivations, what you're trying to accomplish, what your experience and insights have been. Like, let's find an interesting problem. Like, what's the problem that you would be excited about solving? And if we can agree on the problem we're going out there to solve, that's much more interesting than thinking about the solution of the company or the product.
Yeah, I usually tell tell founders, as a recovering founder, here is my advice to you: don't listen to investors, because we are all assholes. And I'm it's paraphrasing, and I apologize for whoever is listening to this, kind of a paraphrase on a Guy Kawasaki talk 20 years ago, that he's talking about, don't listen to assholes. And that thing, I've been using it for now, 20 years at least, which is the founder, the entrepreneur's been working on this idea or that idea for months, if not for years. Then he pitches it to an investor for 5 minutes, and he received a feedback that tells him you should actually build a different company. Don't listen to them. You've been working on it, you know it back and forth. They just heard about it for 5 minutes and they already have an opinion. You need to do what you need to do. However, take it with a grain of salt. Listen to it. There is a reason, and that's what your follow-up question should always be. Why do you think that way? Why do you think that we need to go in that direction and not the original? Is it just fixing, introducing a new feature? Is it a complete different product? Are there other forces that I'm not aware of that are going on? Something actually happened that invoked that kind of a comment or request, or the guy is just want to sound smart and loves the sound of his own voice. But there are those as well. The majority will actually give you some sort of a good advice.
Every conversation I have with a founder, my goal is to learn something from that conversation and to pick up something new. And the best conversation, I'm getting an insight or that I never had before, a unique, special insight, either on the world around them or maybe a technological thing. And this period we're in right now, I am learning every day. it is almost exhausting to try to keep in touch with what is happening in the
it
AI
is
world, and then to keep track of what's happening in the investing world, and keep track in the business world as well. So it is moving fast, and we're sticking with it. And I'm very comfortable in a conversation with the founder. I'm like, you probably know a lot more about this. In fact, you certainly know a lot more about what you're talking about than I do. I do have some experience, and I have some experience that is particular to this industry and insurance industry, but others as well. And let's talk about that. And one of the great things about that is it often accelerates the conversation. Sometimes say, let's skip the first 6 slides of your deck. I don't need to know about the TAM. I don't need to know about the the market structure. I don't need to understand necessarily about the competitive forces. Like, I want to understand how you're thinking about this problem and what your background experience is that's going to make you uniquely suited to solve this problem, and then how you're thinking about solving this problem. And let's talk about how you're going to make money doing it. And I had a conversation yesterday with the founder, and we got all the way to that last part, which is how you're going to make money doing this. And he didn't have a great answer. And we talked about it for a while, and I said to him, I really like you, and I like the way you're thinking about this. I'd really like you to think harder about how you're going to make money doing this, and also how you're going to get to your end customer.
That's
because
critical.
Time is the only thing we can never get back in this life.
Mm-hmm.
And I want to make sure you, as a very talented founder who is going after solving a big problem, is not wasting your time, and that what you accomplish in building this business is something that's going to be worthwhile to you and going to be a meaningful, large business.
I agree. People need to remember, and that's one of the challenges that I see with different, let's call it, over-enthusiastic entrepreneur, is that at the end of the day, you need to sell. It's not just the ideal, we're going to make the world a better place, we're going to do this. There are products who are novel, they are cute, the novelty will disappear very quickly once, the second but better product will show up. But if you don't know how to sell, especially in insurance, and you don't secure your distribution channels, it's not going to happen. This is why when you talk about TAM, the TAM is ridiculous, right? I don't care about $6 trillion, blah, blah, blah market. It's not. Show me the SAM, show me the sum. And if you are, what do you do? Okay, you are, now I cannot get into details, but that's the distribution. This is the size of the serviceable. How are you going to get, what's the number? It's about 9,862 institutes that you want to work with and to sell them that type of insurance. Great. So you know the entire market that fit to your stage where you're today. How are you going to get it? What does it mean? What are the 5 buckets, the 3 buckets? Okay. What does it mean for your unit of economics? Which one is paying the premium or the SaaS fee? And if they don't know and understand and it's not that granular in terms of the resolution that we are looking for, but they need to understand how they're going to make money. Otherwise, it's not a business. It's a hobby. It's fun.
Especially when you're going out for venture capital. I mean, that's probably, if there's something I leave for those who are looking to raise capital right now, is to understand that venture capital is a very particular type of capital. It is the most expensive capital you can possibly imagine, because we're looking for exceptional returns on our capital. And we're looking to build like extraordinary businesses. We go out, when we make our investments, we underwrite with the expectation or belief that each one of our portfolio companies can return the entirety of our fund. We have a $33 million fund. So if we write a $2 million check, that it's going to return the $33 million, if not more, on that. And so our expectations are very high. And we're looking for audacious, ambitious founders who are looking to build those exceptional businesses, and have the drive and the wherewithal and the guts to kind of suffer through the terror that is being an entrepreneur. And I've felt that. I've been there in the course of my career. So I understand what that looks like.
You're actually now still entrepreneur in a way, right? Because and that's for the founders who are less familiar with how the VC world operates. Jonathan, you think about him as, oh, he is the VC, he is the guy with the money, but at the end of the day, he runs a company, he runs a fund, but it's a company. He needs to raise money from LPs. His product is actually you, in a sense, right? And the only thing that he can do is put the bet based on the underwriting, right? It's not a bet. It's an investment. He's doing a serious underwriting. And hopefully that in the lifetime of the fund, which used to be 8 years, I don't know if you're already 12 or you're still in the old school kind of lifetime of a fund, hopefully that will return the fund. And again, back to the master of Excels and the different models and in that pyramid, how many will reach at what stage. And funders don't understand that being a GP, you're a solo GP, right?
Yes, that's correct.
That's hard. And that's one of the kind of the follow-up questions that I wanted to ask you earlier. The definition of smart money or an expert money in the industry, because just to give someone, here, I'm going to bet on you, here is $2 million, please return $30 million in, I don't know, in 8 years or 5 years. It doesn't work. You need to help them, you need to water them, give them smart advice. Do you take a board seat?
Generally, we're either observer or participate in the board. I mean, we're often the largest investor because we're so early and we're making pretty significant investments. We're generally owning a material participation in the company, and we're also kind of in the trenches as well. So like the founders tend to we see this. I think I usually say like, when we make an investment, it's like marriage with no chance of divorce, right? Like we are putting our capital behind you and we're getting together and like we're in a partnership. We may fight, we may argue, we may disagree at times, but we're stuck together and we're going to be there for a long time.
Till death or secondaries put us apart.
Right. I'll have to steal that line. But death or secondaries or exit. And so we are look at that really seriously. I think the best founders also have choices in the capital that they secure. Mm-hmm. And so we kind of have that in view. It's like, all right, all money is green. Like you should probably think about who's the partner you want to have. What do they bring to the table? We think we bring some things to the table, but we're not bringing other things. I remember a funny conversation with one of our founders, and we got into like a conversation about their tech stack and kind of some nuances around how they were approaching technology. And there was like a pause in the conversation. And then I said to him, "Oh, you didn't bring me onto your cap table to give you tech advice, did you?" And he goes, "Not really." And I said, "All right, noted. Let's move on to another topic." And so just knowing where we can really impact. I had 2 calls yesterday on behalf of portfolio companies. One was with a prospective customer and the other was with a prospective senior level hire. That's where we can make our most impact, is helping drive the needle in terms of growth on the top side and talent, opening doors, whether it's for capacity relationships or for appointments if you're a broker. We have used the kind of entirety of our network to help our portfolio companies secure capital, connections, revenue, and talent.
So not smart money, expert money. I think it's better, actually.
Impact,
Impact money.
You can be smart and think about things for a lot and do nothing. And I like to think about impact as much as anything.
Impact, okay. Yeah. Well, even wisdom, and being smart provides some sort of an impact. But you guys are experts and you have the right network. And if you can help them with appointments or capacity and using your network, and you actually know the insurance, which is the hardcore of that business, it's most definitely impactful. And that's kind of the advantage. And again, this is why it's also being entrepreneur. What's your edge? What's your moat? How, we kind of, at the beginning, I started, maybe it was a little bit too aggressive that we see new capital entering and a few VCs that decided to move away from the industry. But still, you don't really have too many VCs defined as InsurTech, right? There were about 37 VCs or CVCs as well that specialize in insurance. And that's a very, very small number. It's like, okay, those are your your competitors, but then there is Stage, there is this, there is that, but compared to the
It's
thousands.
interesting, Gyde, if you might allow me, and it goes back to how we think about what we invest in. Although we may start from a perspective and grounding in the insurance industry, when you look at who our co-investors are, they run the gamut. So it could be lower carbon and congruent, who are mostly known as climate funds. It could be QED or VESI, which are often known for fintech or financial services. It could be, the top generalists like Sequoia and Khosla, investment venture partners, who are generally out there. And so I think we're kind of our view is like we bring a lot of the sort of the perspective on a particular industry, and then maybe a Lightspeed brings a different insight with respect to kind of capital formation and creation. And even in Gyde, you mentioned Will Johnson. It's the Lightspeed healthcare team that's involved there, and so it's been kind of an interesting alignment between the perspective of healthcare investors and those of us who know the insurance industry well.
I'll ask you the last question that I'm asking everyone. What is something the insurance and InsurTech industry should be talking about that is not talking about enough?
I think we are talking too much about technology and not enough about people. Because this technology is going to impact people. And the hard thing of an AI transformation is going to be about organizational change, changing how people work, and helping people navigate through that from a career perspective and a skill and knowledge development perspective. So I'd like to hear us talk about people much more than technology.
Perfect. Jonathan, thank you very, very much for joining me today. It was a pleasure talking with you.
Really a pleasure. Thank you, Gyde.